This story is right up there with all of the election nonsense, all of the impeachment nonsense, and all of the Capitol Hill stuff. Like, the market manipulation that's going on right now, like, this is actual fact, okay? The actions that Wall Street is taking right now is just something I've never seen before, and we're unlikely to see again. The way that Wall Street hedge funds in general are just reacting to this is just showing you that once again there are rules for thee and not for me, because they've been using the same tactics for fucking ever to pump and dump and to do their short squeeze or to do their short sells. Like, the more stuff comes out about this story, the crazier it gets. All of the apps that are taking the different stocks that are currently being targeted, stopping them from trading it. And we're going to start here because losses on short positions in the US firms top $70 billion. Oh, this is just genius because it's all of the people. And this is something that's uniting literally everybody right now on both sides of the aisle. Just because, yeah, it's not that we, at least people on the populist right side, it's not that we hate rich people. It's just depending on your tactics. If you're just going ahead and using nefarious means to collect your wealth, yeah, you shouldn't be allowed to do that. And you shouldn't be bitching and moaning when the fucking tables are turned on you. Short sellers are sitting on estimated losses of $70.87 billion from their short positions in the U.S. companies so far this year. Data from financial data analytics firm Ortex shows on Thursday. The hefty losses come as shares of highly shortened GameStop jumped more than 1,000% in the past week without a clear business reason, forcing short sellers to buy back the stock to cover potential losses. Oh, at quite a beautiful delta. Defined as a short squeeze. That's a term that you probably heard, and yeah, there's nothing wrong with it. While retail investors then piled in to benefit from the surge. Chasing shortened companies became a trend among retail traders. Yes, small retail traders rippling across U.S. markets and Europe. Ortex data showed that as of Wednesday, there were loss-making short positions for more than 5,000 U.S. firms. So many numbers. Its data also showed the estimated losses from shorting GameStop at $1.03 billion years to date, while those shorting Bed Bath & Beyond were looking at a $600 million loss. Ortex said the figures are based on the change in trading prices between the start of January and Wednesday's close and the number of short positions. The company sources short interest data from submissions by agent leaders, prime brokers, and broker dealers. What they're failing to mention here is this is the only reason that this is happening is because people seen that hedge funds were taking advantage of floundering businesses, and then especially when it comes to GameStop, they shorted, I'm gonna probably get the numbers wrong, but I've got the difference between what they shorted and what the actual stocks are. There are 70 million stocks, and they shorted 74 million stocks. How can you do that? When you're a hedge fund, you can get away with a bunch of stuff, and it's good because, as you can see, the Dow's gained 300 points as firms take steps against GameStop transactions. It's interesting, right? U.S. markets rebounded Thursday as brokerage firms took steps to restrict an influx of transactions on heavily shortened stocks. The Dow Jones Industrial Average gains 300 points, or just about 1%, while the S&P 500 climbed just about the same amount at 0.98%, and the Nasdaq Composite increased by 0.5%. After stock trading app RobinHood, and we'll get to a few others, restricted trades involving GameStop, AMC, BlackBerry, and Nokia. All of those were once powerful and prominent businesses, which are just now at the mercy of WallStreetBets. All four stocks plummeted Thursday, while they're popular on Reddit WallStreetBets, where users banded together to drive up prices of such stock despite traditional hedge funds that had shortened them. AMC fell 56.63%, GameStop 44.29%, BlackBerry 41.63%, and Nokia 28.4%. This isn't shaking anybody at WallStreetBets. Their entire point wasn't to make money. It was to just expose these frauds with the hedge funds and drive them fucking bonkers. And as you can see, $70 billion ain't something you can fucking magically wave your hand at and get rid of. But the Biden administration is going to try, and we'll get to that in the next video. But we got to see the fallout of this, okay? There is a really good thread that I'm going to read most of it here, and this dude breaks it down better than pretty much anybody I've seen so far. So many folks, especially in the media, are missing the complete story or the complete backstory on GameStop. GME is the name of the stock, and how we got here. This has been simmering for over a year, and the story behind it is great. I've been tracking it since September, and back in September 2019, the very prolific user at this point, Deep Fucking Value, posted his screenshot, and he had noticed all of the short sells that these hedge funds are doing, and he tried to take advantage of that. So this has been brewing for a very, very long time. It was just a post about his long-term equity anticipation securities, so long-dated calls, on GME. At the time, nobody understood his position at all. The top comment on that post, bid asks, spread on these are ridiculous. Good luck getting rid of them. And for the next year, every month, about once a month, he posted his YOLO GME position every month for a year, and he got made fun of. Caught wind of this trade back in September 2020, a full year after this guy was already holding. So I dug into the public quarterly reports of GameStop, and yeah, they were fucking dying on the vine. Pretty much everybody was a passing interest in video games understand that the industry is not doing well, okay? Their budgets for their games are just inflating, and there's no delta when it comes to selling brand new merchandise, especially in the video game industry. It's a bubble right now, and there's going to be a second video game crash if it's not already occurring right now, and GameStop's right at the front of that. So that's what makes this just as hilarious, because I don't think that GameStop thinks that this is going to be the savior of their company, because they know that these guys are just here to exploit hedge funds, and their stock just, well, happened to be at the wrong place at the wrong time. This guy looked into shorting. For those who don't know, is when you borrow a stock from someone and sell it on the market expecting the price to go down. You eventually buy back the stock at a lower price, return the borrowed share, and pocket the differential. So the short interest was over 100% of total shares. In fact, there was 140%, which makes no sense. How can you sell more shares than there are shares? Exactly. Keep in mind, not all shares are actively traded. In fact, over 75% of GameStop stock is locked up in passive funds and at GME board and C-suite. I'm not even going to pretend to know what the fuck that means. Oh, the board and... Oh, okay. I know the board is. I'm not too sure what the C-suite is. So really, short interests are like 300 to 500% of float. Float is how many shares are actively traded, basically, which is insane. Basically, the shorts, which are the hedge funds like Melvin, which are on their way out, we're expecting GameStop to go bankrupt so they'd never have to cover them, which is highly likely based on the past year or so where they've just hovered right around bankruptcy. Deep Fucking Value has figured this out long before anyone, even Michael Burry, yes, the Big Short guy, from the movie, who bought in after Deep Fucking Value, and he bought in with conviction in his trade, ignoring the haters. A year later, the people start to take notice on Reddit. The prices started to inch up from 4 to 8 to 12 from September to October. And then more people on WallStreetBets started to buying because they like the stock. They like the stock, which of course makes the price go up. So price keeps going up and up and up and up. Eventually, the shorts are supposed to cover, but how? They need to purchase more shares than there are in the company, which means purchasing at any price, which leads to the fact, okay, if they just have the shorts and they have to buy back this stock in order to cover the shorts, why are these hedge funds losing so much money? Well, because they have to buy it at the inflated price, and then when the price keeps going up and up and up, they have to keep covering their shorts that they were betting against. So it doesn't matter how high it goes up, they got to continue to buy in order to cover. See what I mean? So quick aside to explain this, market makers, big banks and funds like GS and Citadel write options. When they do, they have to remain market neutral by law. So that's what's called the Greeks. On options, theta, gamma. Yeah, okay. So that was just a little background. Gamma, the number between 0 and 1 that changes on the call as the price of a stock gets closer to the call price. Let's say you buy a $300 call and a stock is $290. Yes, the gamma would be 0.98. Meaning for every call pushed, 100 shares, market makers buy 98 shares to be neutral. As gamma changes, they have to buy more or sell more shares. On Friday, the price was over every available call strike, which meant that market makers had to buy millions of shares. If a call is in the money and the stock price is greater than the call price, and they have to deliver the shares. So on Monday and Friday, the price ran up very quickly, and MMs hustled to cover the calls and settle them. Then the news took notice and everything went wild. Yes, and everybody, all the big names that we covered, and they were drawing attention to everything. Elon Musk, Chatham, I'm not even going to pretend to remember how to pronounce his last name, your old pal, Chatham. And the price exploded. So long story short, eventually it either costs too much and you have to close your position for a loss, or you go bankrupt. Melvin almost went bankrupt. They got a, $2.75 billion bailout from two other hedge funds, which is already gone. So where does it go here, or where does it go from now? Well, realistically, if everybody was supposed to stay neutral, if Wall Street was supposed to stay neutral and all of the traders were supposed to just adhere to the law, what is stopping GameStop from going absolutely to the moon? Well, all of the bad actors, of course. Major brokers restrict trading on GameStop and AMC amid the short squeeze. Okay. Major stock brokerages temporarily restricted trading on GameStop shares as retail investors spurred an advice on the Reddit thread WallStreetBets send previously undesirable stocks through the roof. To the moon. Catching both brokerages and institutional investors off guard by massive unexpected losses. RobinHood, TD Ameritrade, and Charles Schwab, which purchased Ameritrade in 2020, all placed restrictions on certain trades regarding GameStop. Retail investors on Robinhood were temporarily barred from completing certain transactions involving GameStop at all on Thursday. Yeah, you couldn't even buy anything. Both TD Ameritrade and Charles Schwab confirmed to the Washington Examiner that they had placed restrictions on some transactions of GameStop stocks and other securities. We have been adjusting our requirements for several days, and as we continue to see trends indicating unusual volume in an unprecedented market environment, which appear to be divorced from the transactional market fundamentals, a TD Ameritrade spokesperson said. In so many words of saying, oh no, they figured out our tricks and we need to put restrictions in place. We have made what we believe to be prudent and appropriate decisions to place some limits on certain transactions for certain securities. Nobody's believing the horseshit that you're trying to do. This is clear and present market manipulation. And another app that barred any purchase of GameStop stock was the Cash App, owned by Square, which Jack Dorsey of Twitter is also the CEO of, also blocked purchase of GameStop. So I don't know about you guys, but this really reeks of cartel action. I'm sure Jack probably has a long-winded apology about this, or at least he's penning it right now. And Dave Portnoy, who since selling out Barstool Sports, just focused all of his time on the stock market, so he just has been having a fucking laugh at this right now. And you can see, pointed out, when AOC and Donald Trump Jr. are on the same side, you know you fucked up, Robinhood app. And yeah, it's weird to say that I agree with AOC, but like I said yesterday, a broken clock can be right twice a day, and she is right, but she's right for all the wrong reasons, because she just wants to tear these people down at any cost, and then she'll just go back to virtue signaling about, racism, equity. And you can see kind of the malevolent tone that she has. Gotta admit, it's really something to see Wall Streeters with a long history of treating our economy as a casino complain about a message board of posters also treating the markets as a casino. And just a spiteful bitch. She shouldn't be too pointed in her remarks because, we all know where Democrat money comes from. And here's what Junior had to say. It took less than a day for big tech, big governments, and the corporate media to spring into action and begin colluding to protect their hedge fund buddies on Wall Street. This is what a rigged system looks like, folks. Robinhood, Reddit Army, GameStop, and GameStop to the moon. See the different tone? Because he's already experienced the big tech monopoly on the crackdown there. But has anybody stopped to think, what the fuck does Ja Rule think? Okay?
Who gives a fuck what Ja Rule thinks at a time like this, nigga? This is ridiculous.
I know that's what I was thinking. But of course, AOC couldn't go one entire day or have one good take without completely sticking a hoof in her mouth. AOC refuses to work with Cruz amid a Robinhood GameStop fiasco. You almost had me murdered. Yeah, because Ted Cruz quote tweeted the one that we just seen from Dave Portnoy there and said, yeah, I totally agree. Because Ted Cruz knows what's up. Both representatives Alexandria Ocasio-Cortez and Senators Ted Cruz from Texas are among lawmakers seemingly calling for congressional action after Robinhood restricted trading for GameStop following a surge spurred by a populist investing movement, but with the New York lawmaker rejected Cruz after he agreed with her on social media, telling the senator to sit this one out. Check your Mexican privilege or Canadian privilege, because she claimed he almost had her murdered 3 weeks ago, a reference to the January 6th Capitol riot. What a fucking drama queen. This is unacceptable. Yes, that's the quote, or that's the tweet that we just read. And then, yeah, Ted Cruz fully agree, and then quote tweets it. I'm happy to work with Republicans on this issue where there's common ground, but you almost had me murdered 3 weeks ago, so you can sit with this one out. She snapped, adding that she's happy to work with almost any other GOP member who is not trying to get me killed. In the meantime, if you want to help, you can resign. What a cunt. That's just a flagrantly retarded take. But yeah, just had to put that in there for a minute. And anyways, yeah, Elon Musk is also calling because, well, he was one of the most vocal voices out there just calling for GameStonk to the moon. He's calling for an investigation into RobinHood after the trading of GameStop stock suspended. Yeah, and TD Ameritrade and Charles Schwab and everybody there, but you know what? That's not likely to bear out anything. I'm sure they can probably immediately put something in their terms of service to say, oh, the alt-right trolls, and those stories are already being written, and we'll probably be covering them shortly as well. But they aren't waiting long, okay? WallStreetBets is fighting back. I tried to pull up the actual lawsuit, but Southern District of New York, where this is being filed, their website is down right now, due to everybody also trying to sign on to this because it's a big thing, okay? As you can see, Brendan Nelson is currently the filer against RobinHood Financial and all of their sister companies, Securities and Markets Incorporated. RobinHood purposefully, willfully, and knowingly removed the stock GME from its trading platform in the midst of an unprecedented stock rise, thereby deprived retail investors of the ability to invest in the open market and manipulating the open market. We kind of figured that this would get fucking goofy in the next couple of days, and at least the White House is going to be stepping up their efforts, but this video would be very, very long if I was to cover that. But so we'll break that into the next video there, because it looks like, yeah, the Biden administration is going to be stepping in. But they've already stepped in something pretty significant as well. And it all starts at the top. So yeah, hopefully that gives you guys a little bit more background into what the fuck is going on right now with all of these old ass companies getting a bunch of undeserved media attention. And the way that the mainstream media is covering this right now is functionally retarded. They're showing, oh, GameStop. Oh, what's about GameStop? GameStop has literally nothing to do with this. This is all about making crooks pay, and GameStop is just the tool. And this is far from over, unless the Main Street or Wall Street is successful in re-regulating all of the stock market, which would open up a total can of worms in and of itself. So yeah, let's move right along and cover what the Biden administration is going to be doing about this. You won't like it, but it shouldn't come as a surprise either. Thank you all very much for the gift of your time. I've been Don Consuelo. I want you to follow your gut and get after it. Take care, everyone.